1,765.56 points, while the S&P 20 index ended at 6,081. The market recorded a weekly turnover of 8.62 billion rupees, which 3.13 billion rupees came through the closing transaction. What does this tell us about investor sentiment?
The market remained in a consolidation phase this week. Although trading activity was moderate, the sizable closing transaction suggests that institutional investors continue to accumulate selected stocks through negotiated trades. At the same time, retail investors appeared more cautious, likely wait to fresh economic or corporate catalyst before taking larger positions.
Pressing accounted for more than one-third of the week's turnover. Does this indicate confidence from the large investor despite subdued market activity?
Yes, it does. Strong closing activity generally reflect continued participation by institutional and high net worth investors, while overall market participation was relatively light. These block traders indicate confidence in specific counters. It also suggests that long-term investors are positioning themselves rather than reacting to short-term market movements.
Now turning to the Treasury rate auction held on 8th of July 2026. The government offered 100 billion rupees, which totaled this week to 229.8 billion rupees, resulting of oversubscription of more than 2.3 times. The 3-month yields declined by 2 basis points to 10.21%. 6-month yield remained unchanged at 10.3%, while the 12-month yield increased slightly by 1 basis point to 10.21%. What can we infer from these results?
Yeah, the strong demand clearly shows that the investor remain confident in government securities. The decline in the short-term yield suggests that there was healthy demand for shorter maturities, allowing government to borrow a slightly lower cost. Meanwhile, the stable 6-month yield and marginal increase in the 12-month yield indicate that the market expects interest rate to remain broadly stable over the coming months, with only limited uncertainty over the longer term.
Okay, the government accepted the full amount for the 3-month and 6-month bills, but they accepted only 6.53 billion out of the 15 billion offered for the 12-month bill. Why would the authorities reject a full part of the longer term bills?
This is common debt management strategy. The authorities may have considered the yield demanded by investors on the 12-month bills to be higher than preferred. So they chose not to accept all the bills. Since there was strong demand for shorter maturities at more favorable yields, the government was able to meet its funding requirements while keeping borrowing costs under control.
Okay. Overall, week's data reflects a cautious equity market supported by institutional participations, while the Treasury auction demonstrates strong investor demand and continued confidence in Sri Lanka's fixed income market.
Exactly. Both the equity market and fixed income market suggest that investors are maintaining a confidence but remain selective, closely monitoring upcoming economic indicators, monetary policy developments, and corporate earnings for clear direction.
Thank you, everyone.
And stay tuned with Sempin Research.